Good morning. You're watching Businessworld Live. I'm Danny Laurel. Happy Friday, guys. It's the last trading day of the week. Let's kick off with our banner story. NEDA Secretary Carl Chua says the country's economic output may only return to pre-pandemic levels by the end of 2022 or early 2023. That's on the back of the continued mobility restrictions. Now, Chua told lawmakers during the budget hearing that a sustainable recovery would be anchored on a faster vaccine rollout, a safe reopening of the economy, and the implementation of recovery packages and tax reforms. Chua said prospects for 2021 remain encouraging, and this will allow the economy to recover pre-pandemic levels by late 2022 or early 2023. For the economy to return to pre-pandemic output by the end of 2022, the economy should grow slightly higher than 9% next year, according to Chua. This outlook comes just as economic managers recently trimmed their growth target for 2021 to 4 to 5%. That's from a previous projection of 6 to 7%. In the same hearing, Chua said economic losses averaged at over 73 billion pesos for every week of the modified ECQ in Metro Manila. That's lower by half than the estimated per week loss of 144 billion pesos under ECQ. Chua said 15 million workers are currently affected with the imposition of MECQ in the capital and nearby provinces. The MECQ ends on August 31st. Now, the government is shifting its virus containment strategy from region-wide lockdowns to more localized, granular lockdowns. This new strategy entails zeroing in on barangays, subdivisions, puroks, or even streets where cases are raging and putting only those areas under lockdown. Ideally, when an area is placed on lockdown, authorities will go house to house to conduct mass testing and contact tracing. The National Task Force Against COVID-19 fully supports this strategy shift. Spokesperson Resty Padilla said more localized lockdowns will allow the country to balance public health and economic recovery. Meanwhile, Tourism Secretary Bernadette Romulo Puyat says doing away with province-wide lockdowns will also be beneficial in sustaining the local tourism industry. Now, Asia are set for a cautious start this Friday morning, are looking at the hawkish Federal Reserve comments that came ahead of the Jackson Hole Symposium, which is, of course, today. Now, you can see on my terminal here, the S&P 500 fell from a record overnight. As I mentioned, some Fed officials were saying that the time to start tapering stimulus is actually nearing. And you can see that spilling over into Europe as well. And taking a look at Asia and how that is opening, it is quite a shaky start to the last trading day of the week, with the Nikkei 225 down by 0.6% this morning. And as the markets were reacting yesterday as well, quite red across the sea, even in Hong Kong and in China. Now, another thing that is quite worrying, let's say, is the strengthening or the weakening rather of the peso. And you can see how last print, at least yesterday, just as those Fed comments were coming, the peso dragged down the currency basket of Asia. It was the worst performer, down by 0.3% yesterday. And you can see that this morning, weakening even further. We're back to the 50 levels. We're at 50.115 to the green back. We actually dropped by the most in around 3 weeks yesterday. That's just as well as of course, our economic planning secretary did mention this output issue, that we will not be returning to pre-pandemic levels until the end of 2022 or even in 2023. Now, this, according to Alvin Tan, he is the head of Asia Currency Strategy over at RBC Capital Markets in Hong Kong. Conviction in the market is low and the positioning is light. Another thing to be watching out for here is the hot money outflow, and that was a net outflow of 339.7 million pesos in the month of July here. That ended the 2 straight months that we saw of net inflows, according to the Bangko Sentral. It was the biggest net outflow that we've seen in the past 3 months. That brings our first 7 months of 2021 of a net foreign outflow of $446 million. However, the good news is, if you could call it that, that this outflow is 88% lower than what we saw last year. In the first 7 months of last year, we had a net outflow of $3.8 billion from the foreigners. The bad news is that according to Chief Economist of Security Bank Robert Dan Ross, says that hot money in August will continue to yield a net outflow, especially with the reimposed ECQ that we just saw earlier today. So again, some weakness to the peso might also be worth watching here together with this net foreign outflow. Now, moving on to our equities space, we have with us to open our markets with us, Japheth Tantiang, of course, of Phil Stocks. Good morning, Japheth, and welcome to Business World Live.
Good morning, Ma'am Danny. Thank you very much for inviting me on your show.
All right, Japheth, let's take a look at how markets are opening this last trading day of the week. 6,800 levels, nevertheless, quite a pullback down by 0.25%. Give us a bit of a flavor of how this week has gone. There is, a lot of. Did you even expect that we would be hitting 6,800 levels yet again? And what drove this optimism, if you can put that?
Well, with respect to the market's performance this week, so far we've been tracking U.S. indices. We've been tracking Wall Street. If you've noticed in the past 2 days, the S&P 500 and the Nasdaq has reached record high closings, and that's what the PSEI has been following, which is why we were able to reach such heights given this week. However, if you're going to look at the trading participation, if you're going to look at the value turnover, in the 2 days wherein the market has rallied, which is on Tuesday and Wednesday, value turnover was tepid, meaning that there are still many investors who are staying on the sidelines, many investors who are staying out of the market because of the lingering uncertainties. And then, as we saw yesterday, the market has already started to decline. In technical analysis, you call that doji candle, which states that there's a possible reversal. So yesterday we already saw some profit taking, and that profit taking is because of the uncertainties that lie ahead. Investors are looking towards what's going to happen with the Jackson Hole Symposium of the Federal Reserve, and at the same time, they're also looking towards the upcoming decision of the government with respect to the quarantine measures of the country after August 31.
What are investors pricing in, or at least you as a market analyst, what are you pricing in terms of the decision of the government? What is going to make markets positive here after, of course, the 31st of August?
Well, with respect to the quarantine measures, given that cases are still elevated, there's the possibility that current quarantine restrictions will remain as is, meaning the National Capital Region could still be under the modified enhanced community quarantine. And if that's going to be the government's decision, if our major economic centers or if the major economic powerhouses of the country would remain under tight quarantine restrictions, then it may result to a negative reaction next week. We may see more profit taking next week. At the same time, aside from the quarantine measures, of course, as mentioned, investors are watching out for the results or what's going to happen in the Jackson Hole Symposium of the Federal Reserve. Now, if we see as expected if we see what's being expected right now, which are hints that the Federal Reserve will start, reversing their eased monetary policies, in particular the asset buying program, then it may also lead, to more negative reactions in Wall Street, which could spill over to the Philippine market.
Okay, so you think that our markets will be reacting in tandem with Wall Street? You don't see, like a reversal reaction of markets in developed or investors in developed economies, then shifting over to emerging economies.
Well, if the it would depend on the results of or the results of the Jackson Hole Symposium. If we do see hints there that the Federal Reserve is going to to start reversing their ease monetary policies, then it could have a negative spillover to the rest of the markets, including the emerging markets, because once the Federal Reserve hints that there will be a reversal of the monetary easing in the United States, then of course it will raise concerns such as, okay, how will the U.S. economy keep up with its how will the U.S. economy be able to keep its growth momentum now that monetary policy is little by little taking away its support. And at the same time, it's also going to raise interest rate expectations. It's going to raise interest rate expectations in the United States, which of course may lead to foreign to investors pulling their funds out of the emerging markets, including the Philippines, and taking them into the U.S. bond market.
Okay, so some risks there, depending on what happens, of course, today. Let's take a look at one specific sector and one specific stock, and that is Globe Telecom. And you can see that I'm just going to pull out the 3-day chart, how it rose by 15%, and already 22.8% just in the past 3 days. Is this warranted? Is there any fundamental justification for this? Is this just a knee jerk reaction to a possible IPO for Gcash?
Oh, well, with respect to Globe, one thing that I can point out is that it's been supported by net foreign buying. In fact, month to date, Globe has been the highest in terms of net foreign buying. So it's gaining a lot of traction from foreign investors right now. At the same time, things that we see are being the reason behind Globe's rallies. Number one, you do have the growing calls from the private sector to proceed with the amendments of the Public Service Act, which of course includes the easing of foreign investment restrictions to telecommunication companies. Now, if this does happen, if the Public Service Act gets amended and the telecommunication companies are taken out of that 60-40 rule, then we may see more foreign investors pouring funds into our telecommunication companies, and that includes Globe, and this is going to benefit it. So another reason is is of course their investors are pricing in the uncertainties with respect to the overall economy. We are not yet sure how long the lockdowns will remain. But so long as the lockdowns are here, there are some winners, and that includes our telecommunication companies, which of course includes Globe. So long as the lockdowns are here, we will be more reliant to digital means of communicating, as well as of doing commerce business, and of course that's going to benefit Globe. With respect to prospects, there's already been structural changes in the economy, and these structural changes are in favor of in favor of digital transformation. So moving forward, the expectation is that the strong data demand, or the demand for data services, is going to remain strong because of the structural changes in the economy that are more dependent towards internet services, more dependent towards data, and of course it's going to benefit Globe. And finally, as you mentioned, there's the about that Gcash. With respect to that IPO, if it's going to push through, then of course it's also going to help Globe. Not only with Gcash, it's another with Globe expanding it's going to expand its footprint in the the fintech sector, and of course it's going to add to give a boost to its financial performance. It's going to add boost to its revenues, which of course may trickle down to its net income.
Jafet, last question on that front. Will this be a real threat to our incumbent banks, especially as they start also applying for digital licenses. And you've also got Fitch ratings actually saying that capping it at 7 digital banking licenses will be preventing destructive competition. Are you looking at a shift towards telcos as possible replacement for banks?
Well, for our current banks, yes, this serves as a risk for them. The growing presence of the financial or of the fintech industry in the Philippines is a growing threat for banks. There is the possibility that for consumers to get easier banking services, they would go to those who have the digital means in doing so. But of course, if you're going to look at it on a positive note, what's happening right now, the financial revolution that's happening in the country right now, of course, this is going to push our banks to to innovate as well in order for them to catch up to the competition. So from the usual brick and mortar, of course, they're also going to be urged to venture into financial technology as well. And of course, by venturing to financial technology, of course, it's expected to increase their productivity levels. They'll be able to provide better banking services. Overall, it's going to benefit. It's going to help them through the improvement of their services. But more so, it's going to help consumers in general.
Tama naman. We do need that push for better banking across the board. Thank you so much for those insights, Japet and Tiago of Philstocks.
You're very much welcome.
Here are other headlines we're keeping our eyes on. The government is looking to raise 250 billion pesos from the local bond market in September as it seeks to take advantage of low rates and market liquidity. The Treasury Bureau has set a 75 billion peso borrowing program for T-bills and 175 billion pesos via T-bonds. This is 25% bigger than the 200 billion peso programmed this month. The Bureau adopted a larger borrowing plan since more auctions can be held in September, which has 5 weeks for this year. Now, broken down, the Treasury will offer T-bills worth 15 billion pesos every Monday and 91, 182, and 364-day debt papers. It will also auction off T-bonds every Tuesday worth 35 billion pesos each. This includes 5-year bonds on August 31st, 7-year securities on September 7th and 21st, as well as 10-year notes on September 28th and 14th. The Bureau of Treasury raised a total of 175 billion pesos this August, falling short of its program borrowing for the month. This comes after it rejected all bids during the 20-year bond auction when rates sought by investors soared. And the Asian Development Bank says the government should introduce reforms to revive the labor market. This after the Philippines posted the highest jump in unemployment rate and the second largest decline in labor force participation rate amongst its peers last year. The multilateral lender noted that the Philippines saw a 5.2 percentage point rise in its 2020 jobless rate. That is the steepest increase among 21 ADB member countries in its study. ADB said it is essential to pursue reforms that will help vulnerable sectors like low-skilled workers, women, and those in the informal sector transition to better quality jobs. ADB Director for Human and Social Development for Southeast Asia said this is how the government can ensure that economic recovery will be inclusive. And that's a first look into the business day. Today is Friday, August 27, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.